Hey guys, what's going on? In this video, we're going to talk about GME. The last video, I pointed out GME was going to drop from $88, potential all the way down to $40. And I'm going to reveal to you what exactly is going to happen next. So we're going to address that. But before we're going to go into that, I want you to understand that sticking to your strategy as a trader 100% of the time is what will get you paid. You can't be changing your mind about the market just because the price action, because price action is going to change. The question is it going to challenge your opinion? Are you going to be like a little bitch and change your opinion when the market goes against you? So the most important aspect is the psychological aspect. I want to bring the picture of ARK's Innovation, Cathie Wood. Is she changing her strategy because her fund is down from 160 not so long ago all the way down recently to 30 bucks? That is a 70-80% drop. Is she changing her strategy? Absolutely not. Can ARK Innovation go higher? Yes. But the point is, if you jump out right here, when your whole theory of investing of ARK's Innovation, Cathie Wood, is challenged to the most, you're going to jump out right here. Guess what you're going to miss out? You're going to miss out on potential bounce. You're going to miss out on potential returns, okay? So she doesn't change her strategy. And maybe you're pissed at her. You're like, Leo, man, I wish I knew your channel when you said to short the damn thing over here. And I wish I listened to you when you told me to short this shit right here and right here and right here. But guess what? Maybe I didn't listen to your videos at the time. So, but the point is, there's billions of money invested in ARK Innovation, and they have persevered just a 70-80% drop. Can it drop still? Absolutely. It can drop, but in relation to how much higher it can go, especially looking at a 5-10 year future outlook, okay, this is a pretty good damn price. But all the people that jumped out here, and especially in the last few days, are they going to get to participate in the eventual appreciation? No, because they did not stick with the strategy 100% of the time. Understand, the market will beat you each and every time if you will keep changing your fucking mind about, oh my God, my trade is going red, I got to get out. And you get out right before your trade turns green. So you have to stick to one strategy only, and use it every day the market is open, or you will never, ever beat the market. The reason Cathie Wood has a chance to beat the market because she's not throwing a towel at the times where her trading strategy is being mostly challenged. So maybe you have listened to the last video on GME and maybe you've thrown in a towel. The point is, okay, there's billions of investors that Cathie Wood's got in her fund. And they're not throwing a towel because they understand if they jump out at the wrong time, they will miss on the entire strategy. So understand that's very, very important point. The price action will cause you to challenge your opinion of whether you should go long, whether you should go short. You cannot fluctuate your opinion just because the price action, what price action is doing. I'm about to show you in the chart how critical and important that is. So just understand, just because the trade temporarily goes against you doesn't make you wrong. It only makes you wrong if you don't stay with the strategy 100% of the time. If you kept changing your mind day in, day out, you will never ever have a chance to beat the market. So understand that, hey, nobody's giving Cathie Wood a lot of shit. Even when she's wrong on Tesla times and times again, right? She was telling you to buy it here and to buy it here and here when telling you to go short. Tesla's down 450 points, one of her major holdings, right? It's down 40%. But how crazy would it be if Cathie Wood just jumped out right here and said, oh, fuck it, I can't take this shit anymore, okay? Guys, it would have been horrible. So you cannot give up on your trade. Okay, and I personally believe Tesla's got way more room to go lower. I mean, this is a highly, highly bearish chart, guys. Understand this black candle is no joke. If you don't understand what a black candle is, make sure you take our course. I'm about to walk you through the GME chart for those of you that have jumped out at the worst possible time looking at this GME thing bounce. There's a few things to consider when you trade besides the price action that are critically important. So let's take a look at the GME chart. If you're only paying attention to the price action, you will miss out on some incredible trades. And yeah, no wonder why some of you are happy locking in 100 to 100 bucks. Guys, you could say, well, Leo, I put $5 grand in this GME trade and I lost. Tough shit. There's going to be some days where you're going to lose in the market. What are you going to do? If you listen to the video carefully, I told you specifically to split expiration between this week and next week. If you've been trading our alert group, you would know, okay, you were up from, in some instances, 5,000-10,000 to as much as $100,000, $150,000, $200,000 on this trade because we started buying the thing, started buying puts on this thing right here. Okay, when the stock was 100, 105, 110 level, that's when we were getting in. And some of you were holding 100 strike calls, 95 strike calls. Okay, and even when I posted the video, the stock was still at like 89 bucks, and the next day it was trading down to 77. So I don't want to hear no shit about this trade. Okay, you either stay 100% true to the strategy, or you shouldn't be fucking trading at all. Because if you're going to keep jumping from one thing to another, you will never have results. So dare to understand this trade. I'm about to break it down to you. So earlier on the Tesla chart, I've shown you a black candle. It's not every candle is going to be the same, but notice what happens after the black candle, or any black candle for this matter, on the Tesla chart. So here's the black candle, particularly the one that's got a tail sticking out like this. To the upside, you got a thin tail, and then the body of the candle is more to the downside. That's it. Bear reversal candle. What happens after that? The stock drops. Here's another bear reversal candle right here. What happens after that? Well, Tesla drops again. Backs up a little bit to the trend line, drops again. Okay, look at this candle right here. There's chances are Tesla is going to resume the drop next week. Now, when we look at the GME side right here, look at the candle that was created today. That is a bear reversal candle, okay, where the stock shoots up and then it drops. That is highly bearish, especially if it's combined. When you look at this accumulation distribution index indicator, when the accumulation is actually absent. Okay, what this really means, yesterday when the stock artificially pumped to a level of 108, what happened to the accumulation distribution? It actually went down. What this tells you is an insane divergence between the price action and what the stock is actually doing. So what did we tell you? If you're a part of the alert group, we told you yesterday when the stock was holding, we said once it gets off hold, when it was right here at 108, 106, we told you short the hell out of this thing because it will go lower. Now at the same time, if you look at the option chain, every moment GME stock actually shot up higher. What has transpired is an increased put buying volume. If it was indeed a short squeeze, okay, wow. The number one objection, well, you can't short GME because, oh my God, it's got all this crazy support from all these goofballs out there, and they're just not going to let it drop. It's a bunch of bullshit. This stock's got a history of dropping. It recently dropped from 190 to the current levels. Okay, it recently dropped from 200 some to all the way down to 100. It recently dropped. Made another 40, 50 point drop right here. If you study the history of the chart of GME, it drops it all the time. And it pumps. And, however, there's an important distinction, right? As you can see, when it was pumping from here to here, let's take this interval on the chart right here. What was happening to accumulation distribution? Well, it was pumping as well. Okay, look at this time. It pumps higher. What happens here? accumulation distribution is going lower. So what it tells you, this artificial pump was created indeed for the sole purpose of liquidating stock. And when I say this is actually happening on low buy volume, okay, I want you to compare these candles right here, these gray candles, which represent the buy volume here. Okay, we're at 25 million on the best day. We were at, 20 million level right here. Now, what do you see? There ain't nothing going on. There ain't nothing going on the buy side here. 10 million, I mean, that's twice less, 2.5 times less, most of the candles right here. But notice that yesterday when a pump happens, it is a bear reversal candle. Literally looks like this. It shoots up and the stock gives up right away. That is a bear. Guys, when you see this, that's a bear. The next day, it confirms it. Okay? And you can't just look at the candles, right? That's why I got this accumulation distribution index right here, so you can see that when the stock price action pumps, they're actually selling the hell out of this piece of shit. That's how you know the next move is lower. And if it by any chance pumps Monday again to the same level, by the way, we did set a lower high today, which is another bearish sign. It's a lower high. We shot up to 108. Today the high was maybe 105. So from 108 to 105, that's a lower high in the last 2 trading sessions. So basically what I'm trying to tell you, the bull volume that typically will lead to an explosion like this in a stock like GME, it is absent. There is lack of buying volume here. We're setting a lower high on day-to-day basis. And to help you visualize this a little bit better, we're still against this gap. When something is against this gap, it is major because it's going to take a lot, despite of this crazy price bounce, okay, from 77 to 108 yesterday, right? It still was unable to break this gap down. So there's major resistance on the way up. Unless we see a volume like this, which we already know there's no follow through on volume, the stock is going to have zero shot of getting above this level. When you clearly see that everybody's getting out at a slightly better price than it was just a couple of days ago. Guys, this is a bear. But what also makes this a bear, and the fact that while every one of you is scared shitless about the fact that it's going to pump because, oh my God, it's a short squeeze. Fuck the short squeeze. Okay, it's also got a bear pattern right here. Okay, it's a head and shoulder resemblance in the pattern. And so the next move is lower. Can we go sideways slightly for a little bit? Sure. But the ultimate resolve in this pattern is to the downside. Okay, especially when you combine it with a one-day counter trend rally. I'm not sure if you noticed, but a lot of stocks, they were trying to scoop them up at these crazy low prices like Carvana, like UPST, all the stocks that are basically the absolute bottom of the bottom. Stocks that I pointed out we were shorting when they were $400, $300, $150. These stocks are like 30, 40 bucks. Okay, so when you get this one counter trend rally and they're buying this bottom of the barrel shit, okay, that stuff is not going to last because those are the same stocks they're going to be selling in the not so distant future. So you can get a counter trend rally, but look what you're looking at. Remember, on the GME chart, I've shown you this gap down. Now, every candle here represents a lower high, including the candle today on the S&P 500. So from here, you go to here, you go to a lower high here, you go to a lower high here, and you go to a lower high yet again today. So despite of the increase in the price action, what you're really getting here is a confirmation of a bear trend. And I have pointed this out for you guys. And look, accumulation distribution index does not lie. As we're going higher today, there's basically overall trend in the accumulation distribution is lower, which tells you while the index is actually shooting up higher as far as the price action concerned, okay, there's still sellers. There's still people that are using this level of 4,023 to get the hell out of the market. So understand this, that one-day counter trend rally does not break the overall trend, which we are in a bear market, and we are going to go way lower. Now beware, because Monday, can we shoot up to this level of 4,050 and then reverse, or even 4,100 and then reverse? Absolutely. As pointed out by the historic analog I have presented to you multiple times, I've been insanely accurate. You can have a situation where, look right here, right? We're finishing somewhere in the middle, sort of like today, and then you have a bounce the next day, and right after that bounce, what happens? We go lower, and what happens the next day? We bounce, right? I mean, you can clearly see that every time we're dropping lower, we bounce, but we finish lower. We bounce the next day, we finish lower, we bounce. Like, look, this sort of representation right here, but the historic analog, would be an equivalent of us going back to this level of 4,050, 4,100 before the drop resumes. Look, you gotta understand that these counter trend rallies, they will happen. So could we shoot up to here? Absolutely. 40,050, 40,080, 40,090, maybe just under 4,100. That still wouldn't mean that we even closed the gap right here that was created. Guys, this would be a beautiful area to short the hell out of this market, because again, majority of the people are still getting out. And it is normal to see this counter trend rallies, especially in a severe bear market. One day does not break the trend. So, since I have posted the video, guys, on GME, what I have really done for you is pointed out an insane opportunity, because, again, I don't change my mind just because, since I've posted the video. And by the way, guys, there's no way for me to know when you're going to see the video, when you're going to get into a trade, if you're ever going to take the trade or whatnot. But the point is, if you watch the trade after market hours and you got into the trade the next day, you're doing great. Guess why? Well, because if you shorted it on my message saying that this stock is the best short selling opportunity in the current market situation, based on everything I've just shown you, okay, you would have gotten a great price. But guess what? I've got some people who recently signed up for Coach, and they're like, well, Leo, I saw the price going higher, man. I know you told me to buy the puts, man, but I just couldn't fucking do it because the price was going higher. Right? That is the number one reason traders fail, because they don't understand what's going on overall here. Okay? They're scared because, oh God, what if we get a short squeeze here? Well, the probability of the short squeeze here is like 1%. The probability we're going to drop and this bitch is going down is like 99%. Okay, so when I get a man, like literally a grown-ass man that can't locate his balls to short the bounce, that is a problem. Okay, later he gets in maybe when stuff drops at $10 lower. It's not the same thing, because your cost is going to be totally different. Instead of buying an option for $2, now you're paying $5, which makes an exact impact on your exit on the trade. The same guy that got in can now get in at 10 with a 5x trade. The same guy that was getting at 5, for him to get a 5x trade, now he's got to wait another 20, 30 point drop to be able to cash out at 25, guys. Your entries make a huge difference. So when you're watching these counter trend rallies and you see the accumulation going lower, and you see the overall market conditions are insanely weak, and you see this head and shoulder formations, and you see that all of these contacts happening while we're still in the death cross formation on the chart, okay, you have to understand that your action as a trader is to short the bounces when you look at all these contacts in the chart of GME. So with that said, maybe you were scared shitless to take the trade when you saw the pump. Maybe you only got in when you saw the stock ultimately beginning to drop 10 bucks. Okay, all of these nuances play an impact on where your trade will go. But I will tell you this. I had one guy that's over 80 years old that got his account in this trade from you know, 100K to over $500,000. And now he's down to like 160K. Is he bitching? Is he crying? Are ARC Innovation investors, are they bitching? Are they crying? Okay, the only way they will be crying if they get out at the lows. The only way you can mess up a trade like that I deliver to you on a silver platter, okay, if you get scared, if you don't enter at the right time. Okay, if you pay too much, it's going to be painful to exit at the right time. Therefore, we may hold. We may hold for a bigger move. Guys, entries and exits are huge. And for those of you that stuck to the trade, no matter what happened, I salute you. Depending on the strike, you either made money or you lost money. The point is, you have to stick to your strategy each and every day. Otherwise, you will be the market's bitch and you will never win. That's the message for today. For those of you that are interested in beating the market, I invite you to learn how to short the bounce trade with 13 Market Moves Coach today. Visit 13mmtv.com. Let's roll. Happy weekend. Stick to your guns. What's right for you may not be right for everyone, but you've got to stick to what you believe in each and every time, 100%, and that's what gives you the chance to beat the market. Let's roll. I'll see you guys in the next video soon.